Did you know that Cathie Wood, who has a reputation for being a Tesla bull, recently purchased an absurd quantity of Tesla stock? Given her unwavering support for the industry's top EV manufacturer, this information is not to be missed. When shares of Tesla were going between $300 and $350 a share in the beginning of 2022, Cathie Wood sold some of the stock. Now she is buying it back. Although she has been one of Wall Street's biggest Tesla bulls, Cathie Wood, the founder, CEO, and CIO of ARK Invest, is still bullish on Tesla. The stock has been at or near the top of the holding list for several of her exchange-traded funds. It is important to note, though, that Wood sold Tesla shares a few months ago when the price was close to its peak. In fact, Woods purchased an additional 190 Tesla shares in mid-October on top of the more than 100,000 shares she had purchased earlier in the month. Wood's trading has undoubtedly been timely in repurchasing shares when the market declined and selling some off when it surged again. Following Tesla's announcement of its delivery and production numbers through a press release in early October, ARK made its first purchase of the month. Long-term, not many people are as positive on Tesla as Cathie would be. The star investor anticipates the stock to be worth more than $1,500 by 2026. Wood's most recent purchase occurred after the stock dropped in response to Tesla's Q3 report. Although it isn't even trading at 20% of that price at the moment, Elon Musk, the CEO of Tesla, stated quite audaciously during the Q3 earnings call that his firm might be worth more than Apple Incorporated and Saudi Aramco put together. Musk believes Tesla is worth roughly $5 trillion, given that Apple has a market capitalization of around $2.3 trillion and Saudi Aramco's has a market capitalization of around $2 trillion. Experts believe that the following are the main reasons why Wood is purchasing a large number of Tesla shares, and you should too. Cathie Wood enjoys growth, as was previously mentioned. Her most recent purchase was made after the stock fell after Tesla's Q3 report. Several analysts were focused on management's admission during the earnings call that it expects to fall short of the 50% growth goal for 2022 vehicle deliveries compared to last year, but Tesla still projects that it will meet that goal for vehicle production. The company's Q3 shipping bottlenecks will be the reason for the difference. Due to logistical problems, Tesla produced 22,000 more vehicles than it delivered, but those vehicles have buyers and won't just sit in inventory. Long-term investors shouldn't be concerned about whether buyers take ownership of their cars during one quarter or another because production isn't the only thing expanding quickly. In Q3, overall sales increased by 56% year over year, while net income more than doubled. Tesla's business is still profitable. How Tesla's profit margin will fare when more manufacturers enter the EV market is a concern for some investors as well. It is not very surprising that automotive gross margins decreased by 258 basis points year over year given supply chain limitations, and while Ford recently warned investors that it expects an additional $1 billion in inflation-related supplier costs in Q3 alone, Tesla's automotive gross margin held steady at 27.9% versus the prior quarter, suggesting that the company is making up for added expenses. Tesla has raised prices on its products. Investors should take this as a positive indication that those price hikes are helping and are not sapping demand. Finally, Tesla benefits from contributions from other products. Tesla critics pointed out that the company has a limited product lineup that hasn't been updated for years. Still, the electric semi-truck will begin deliveries on December 1st to its first customer PepsiCo, and Tesla CEO Elon Musk himself said that he will personally be there. The much-anticipated Cybertruck is also on the final lap, according to CEO Elon Musk, and should begin deliveries next year. Also, Tesla is expected to introduce a lower-priced EV soon that will expand its product line of passenger vehicles. Musk also told investors the company is working as quickly as possible to increase battery production capacity. Its energy division also includes battery storage and solar rooftops and has more demand than it can supply. Sales from that division represented 5% of total revenue in Q3 as its energy storage deployments jumped 62% year over year. All of that should result in many years of growth coming from different places for Tesla. For what reasons is Tesla stock worth buying? First, Tesla offers cars are selling like crazy. It's difficult to argue with success after 10 years at Tesla. In fact, despite predictions from Tesla detractors, orders for the company's semi-truck and Cybertruck are swarming in, indicating that demand is not abating. Although Tesla is a varied firm, its cars account for around 80% of its overall income. However, with just one stock transaction, investors can purchase shares in an exciting range of new and developing technologies. With new plants recently opened in Austin and Berlin, which significantly helped ramp up the production of Tesla vehicles, with a presence now in Germany, Tesla has big plans for the future. Musk estimates that over a dozen startups operate under the Tesla brand. Tesla designs and manufactures its own battery systems, solar technology equipment, supercharger stations, vehicle service centers, and self-driving software and hardware. Tesla will face competition from Daimler AG, as well as the leading automakers in America. And in Europe, VW and BMW, in addition to Tesla's FSD soon, breakthroughs in robotic taxis and humanoid robots like Optimus are anticipated. In addition to increasing battery production to support the growth of Tesla's vehicle manufacturing, the energy segment of the company is also increasing production at its gigafactories. The EV company recently filed documents indicating that it is evaluating the possibility of building a lithium hydroxide refining facility on the Texas Gulf Coast, which would be another way to streamline its supply chain and control costs. If the project proceeds as planned, the business stated that commercial operations might start by the fourth quarter of 2024. This would allow Tesla to take advantage of the incentives provided by the Inflation Reduction legislation. Tesla has already benefited from the new law, which reinstates some tax credits that had expired for customers purchasing new EVs tests. These credits were previously terminated after a manufacturer sold more than 200,000 lower-priced vehicle models, and the fact that a larger portion of its supply chain is based in the U.S. will also help it meet eligibility requirements. Elon Musk's position as CEO of Tesla might be seen as both a benefit and a drawback. Musk is essentially what keeps Tesla alive. Musk plays a similar role in Tesla as Steve Jobs did in Apple and Warren Buffett did in Berkshire Hathaway. However, Musk has recently made a number of decisions that most investors find concerning, but overall, the ride seems to be getting better for shareholders as the company continues to generate profits quarter after quarter. Tesla's off-the-charts value multiples are unavoidable. Now that it has expanded to become the biggest automaker in the world, Tesla is comfortably atop the industry. If things keep going Tesla's way, that is unlikely to change very soon. If past performance is any indication, it is generally not a good idea to bet against Musk. The company's future appears bright, and although a PE above 70 indicates an extremely high valuation, if Tesla keeps growing at or near 50 for a few more years, investors will not view the stock as being as wealthy. Nevertheless, there are still risks associated with purchasing Tesla now, as there are now other EV companies that investors should be aware of and should be ready to accept the idea that they will be more established in the future. Rival Mesa Plant Tesla's position in short investors should include Tesla shares in a portfolio that is well diversified if they are interested in purchasing them. As the EV industry as a whole and Tesla itself enter a new phase, the firm is positioned itself to lead the way forward, even though future results may differ from past ones. Given all of Tesla's pending issues, it is prudent to carefully consider if this is a wise moment to make investments in general. Being a strong supporter of innovation, Cathie Wood is still quite optimistic about Tesla stock. She consistently expresses her enthusiasm for Tesla and its next innovative projects. Don't forget to subscribe to this channel to receive a ridiculous quantity of updates about Tesla stock.